Next up here we got Aussie yen, which also might be reversing. So it's hitting this major zone here. You can see it was functioning as support at one time, then it broke, and then now it's been resisting. It's taken all month to get back to this point. And as soon as it hit this point the first time, you can see big sell-off and then massive bearish engulfing candle. And then, it's retesting this area. You got a couple baby candles. So far today, you got lower high versus, these previous days here. So it's it could be potentially reversing. So, and I think if you put it on these higher time frames, you can see this is an area of, previous historic resistance, right? Like, it hasn't really been above 96 level in a very long time, back in June 2015. So it doesn't really like to stay above. And then you drop it on the monthly here, you can see it wicks pretty heavy, like the highest monthly close ever, recently. I'm not talking about price back here, but currently in the last couple of years here, price has not closed above 96 level on the month. Like, this was the closest. It was like 96.16 and then sold off next month, obviously. But so it is a serious, significant resistance zone. So we'll clean this up here, and we'll just look for where a potential reversal might be and where we might be headed. So obviously you need price is still very, very bullish. It's way above this moving average technically, but you start dumping it on the lower time frames here. You can see price came up, pulled back. I do think this is probably like a 786 pullback. Yeah, you can see it perfect. So it's a good sign for a reversal. Such a deep pullback, but obviously it has to start breaking lower now. It hasn't created lower lows, lower highs yet. This potentially could be a lower high if it's done, but it hasn't created a lower low yet. So obviously waiting for that. I'd be waiting for price to take out this segment here right below like 95.30 level. Take out this price zone here, and then obviously break below this 1 hour moving average, and then retest this zone. And then if that happens, then I'd be looking at just the next major zone, which would be right here, right around 94 level, just below it, between like 93.88, 93.58, kind of like a 30 pip zone here for price to go to. And then if it breaks that zone, it's obviously going to go down to there's still this zone here. So there's a couple zones that has to break before it really goes bearish. And obviously would have to test this moving average as well. But as far as like a first trade kind of thing, potential reversal trade that we could potentially grab here would be something like this, and wait for price to break this zone, cinch your stop. I would keep it above these wicks just in case there's a liquidity grab back into this zone. You don't want to get stopped out if you don't have to. It does affect your risk to reward, so that's not great. 2.4, 2.5 is not great. However, once it breaks below this zone, breaks below this moving average, and then retests it, it might create a lower liquidity zone for you that could function as potential relief for us. So like, basically we'll have this major zone to protect us for liquidity, and then we'll have like a zone up here to protect us, and we just got to keep our stop above that zone, wherever this new higher liquidity zone is. Right now it's up here, but the new one could be in this area somewhere here. So that automatically helps our our risk to reward. So then you're looking at like 3.6 now, maybe a 4. I'd like a 4. So now you're just looking for price to this could be its new high, and then you want it to create its new low, something like this. And then you look at the Aussie pair correlation. So like Aussie Swiss, which we just looked at, is possibly doing the same thing now. So if all the Aussie pairs are selling off, that's a good sign. And we got a guy in the chat, Emad. Hey. So yeah, if it breaks below this zone, that's a good sign. If all the other Aussie pairs are doing the same thing and selling off, that's a good sign. You can see this hour is already rejecting this area as well. So I mean, things are leading up, but yeah, I'd like price to break this 1 hour moving average, retest this zone, and then be good to go, and then ideally create some sort of lower liquidity zone in this area. Even lower than this one would be nice. Then you can just set your stop above it and kind of protect yourself for your entry, and then target this this bottom zone first. So this is about 160 pips, which I think is roughly the weekly movement. 188 pips is the weekly movement right now. So that's a potentially good trade for, you know, next week. Would be right here, break, retest, target this bottom of this zone for next week. I mean, it might be like, I guess it's only Tuesday, so this could be set up by Thursday, but you might not want to take a trade that late in the week. Just depends on maybe your trading criteria, but I do think this is going to set up nice. I think we're going to get a good pullback at least, and if not, I mean, this is historically, like I said, where price has sold off significantly. So who knows if it sells off enough and then ends up going below this daily moving average and becomes bearish. It is possible. I do think these yen pairs could transition to the downside, and because the yen is going to most likely will gain value because of uncertain economic times. People move their money to the yen because it's a safe haven currency. So it is possible. So, but you can see, I mean, the daily candle's rejecting this zone. Yesterday rejected this zone. So it's going to bounce back and forth. It's basically the bulls and bears are at it. Can they break this historically high zone, or like, they obviously don't want to sell off, but I think they will eventually, because I don't think they're going to be able to break this zone. It's 96 levels, very significant. So yeah, waiting for that break and retest potentially next week, and then taking that retracement trade here. It's a good idea if we this is going to be the most accurate thing, but if you just look at, I mean, there has been pullbacks, like that was a full pullback. So there already has been healthy pullbacks, but I mean, you could still look for a retracement trade based on this entire segment here. I mean, the weekly kind of depicts it a bit, but and you can actually see, like, weekly wise, all these wicks in this area. And last week sold off heavily. It's about half this candle's wick. So, but anyways, looking at this pullback scenario, I mean, this zone here that we got marked would be right between the 618, 786 level. So right within the normal pullback range. So, but again, this has pulled back before, like throughout this price segment. So I don't think it's really super due for a pullback. I just don't think it's going to break this zone. Therefore, it has to pull back. So it's kind of just weighing out the scenarios against each other. So yeah, that's Aussie yen here. I'm looking for it to break, retest, and looking for a 160 pip grab to this bottom zone, and then potentially further. I mean, if it breaks through this zone, if we get in this trade up here, let's say Thursday, Friday, or maybe it takes a little bit longer, we just want to be certain, Monday, and then Monday would be a new month, so then you have the full monthly range kind of thing, which is about 500 pips. So then we could target this all the way down here, this 91 level, and then just monitor the trade. This would basically be next month's trade, and then all the way to November here, and then we would just monitor this entire trade, and then if it cracks this zone, if there's a lot of momentum going through this zone, great, and then we can just keep holding it, and if it breaks this zone as well, then just keep holding it all the way down to this 91 level, which is the full monthly range, about 500 pips. So if we get in right here, let's say, and it doesn't really pull up anymore, it's about 420 pips. So could grab this whole thing. I mean, this is a real potential setup for next month if it breaks this level and then just keeps, breaks this level, moves in the direction of this one, and then just keeps going. If there's enough momentum, which it potentially could be, because this is such a high liquid zone up here. I mean, there's a lot of selling pressure at this zone, so that could create a lot of momentum downwards to take out these zones. And then, I mean, if this needs liquidity, all it has to do is come back up to this zone and find it, and then boom, boom, and it'll keep heading back down. And there's tons of liquidity up here if it needs to grab it. So I think I think that's what it might do. So that is Aussie yen. That's what I'm looking forward to the rest of the week, and then in next month is this break and retest and targeting, you know, potentially 91 level or, you know, 93.80 level. So see you guys in the next one.